Let's talk about what everybody's talking about, and that's the housing market crash. Now, will interest rates crash the market? All of a sudden, in March and April, we're seeing interest rates go up dramatically, and I'm hearing the market's going to crash. We're back to 2007, 2008, when the market tanked. Now, let's take a look at what the news is actually saying. According to the economists, okay, so we can take a look at some hard facts. Now, I want you to come with me on this one because this one's Next Advisor. They partner with Time on this. And you can see clearly here, I'm going to zoom in a little bit so you can kind of follow along with me. The dramatic, I'm going to highlight it for you, the dramatic increase in mortgage rates in March, right, jumped from 4% to 4.5%. That was pretty nuts. Now, one expert recently told us the average rate could hit 5% within a month, right? And obviously, some rates are already at 5%. Now, here's the thing. Experts have pointed towards inflation. The Federal Reserve starts raising its benchmark short-term interest rates. And of course, that affects the financial markets. Now, if we scroll down a little bit more, rising rates mean buying a home is getting more expensive, right? And at the end of the day, let me just zoom out of that and I'll show you something else. What happens then is that buyers can purchase a lot less. Now, if this keeps on creeping up, if we get to 6%, 7%, do we see a problem at that point? Well, let me also show you something else here. I'm going to go back to something I found earlier today, and this one is from CNBC. Now, Realtor.com, let me zoom into this one so you can get it, but the total amount of active inventory for sale is still down 13% from a year ago. So, active inventory, there's less, right? So, but it may be on track given the rise in new listings to surpass year-ago levels by the summer. Look, we're heading into a hotter market, even with the interest rates going up, right? But still, here's what's going to happen. There's still higher prices, but here's one thing. The supply doesn't mean that it's going to go down. I'm going to stop sharing this because what's going to happen is sellers are going to have to get real. That's the thing. Nobody's talking about this because people are coming from emotion. They don't look at the facts, and I'm going to show you one other thing. The fact is this. If it gets to 5.5%, if it gets to 6%, when I started in real estate back in 2004, I think the interest rates were around like 6.5, 7, 8% maybe. And that was reasonable. I'm like, oh, that's not bad. Now, if it gets to 6 at the end of the year, let's say it does, which I don't think it will, but let's say it does. What happens through the summer, we're still in a hot market. People are selling. There's just a higher demand all across the United States for homes. And there aren't enough homes. That's the thing. Now, I'm going to show you one other thing here two other things. And I want you to, and I'm going to put the links here on everything. Here's one economist, right? And this one is Odetta Kushi, Deputy Chief Economist for First American Title, one of the largest title companies in the United States. We do need price appreciation to slow today. It's not sustainable over the long run, that's true. But high price growth today is supported by fundamental short supply, lower rates, still low, right? Still low, and demographic demand. There is more demand in some areas than others. And we're in a much different, check that out, different and safer place. Better credit. That means we're not loaning to people that can't actually purchase homes, right? Low debt to income ratio, there it is, and tons of equity. Now, we're talking about equity for people that, hold on, let me zoom out of that for you. People that have bought over the last few years. We get into people buying now and we look into the future. Now, that could be different, right? Everybody now has equity if we've owned for a few years. Now, I'm going to show you one other thing here, and then I'll let you go. This was very impressive because Pulseonomics, and I posted this into Lab Coat Agents, Pulseonomics just released this latest, I'm going to zoom in for you because you're going to like this one, the latest home price expectation survey, where, look, they surveyed 100 economists, real estate experts, and investment in market strategist, right? Here's your forecast. Over the next 5 years, pay attention. I'm going to just zoom into this because this is beautiful. Now, this is more realistic, right? This is no more fear-mongering. Interest rates are still going to go up. They took that into consideration. We're still going to end up with overall nationwide 9% higher. 2023, almost 5%. 2024, there's 2025. So you see a steady decline and an increase, but still an increase, right? Here's a report if you want it. Actually, it's over here. I'll put it into the link. It's a really, really simple but good report. So look, pay attention to the actual facts. We're seeing a lot of numbers being thrown out. We're seeing a lot of people talk about the market is crashing. The interest rates are going up. Oh no, what are we going to do? Look, it's a lot different this time. But still pay attention because we don't know at the end of the day what's actually going to happen. But I can tell you if things continue to go to where they're going to now, we shouldn't be worried. At the end of the year, we'll see that the sellers will be like, got it. We need to be a little bit more realistic about our price. The market did slow down a little bit, but it still continued to go up overall, right? That's the key. Now, if you have any questions, reach out to me. Do me a favor, subscribe if you're watching on YouTube, and comment. Because when you comment, other people read it. You may give me ideas that I don't even know about. Because remember, this is just my opinion from me reading. I could have read this whole thing wrong. So hope you enjoy this comment. Let me know what you think and subscribe to my YouTube channel if you haven't already. Have an awesome day.